screen. If you won't be able to see the screen, you could tell me. Otherwise, I would assume that you could see the screen. I will turn it to the full mode. And now we would be starting the pre-scene analysis of Happy Holidays. In a pre-scene analysis, you know that there was a material, pre-scene material published by CIMA. We had a quick look of that material, and that was having the information, the brief information about the holiday package or the package holidays industry. And it was giving the information about your company, Happywell Holidays, as well as it had given us the information about your competitors and the business environment and some of the the news excerpts like taken from the magazine or the different social media platform. So the objective of doing this analysis is to make you understand the structure of your company, the business model of your company, products of your company, organizational structure, the risks, and the threats and the opportunities in the business environment, and the comprehensive understanding of your ecosystem, like your company is operating in not in isolation. So we will need to understand that how we are collaborating with the other companies or the other participants of the ecosystem. You have already studied about the ecosystem. That was the first chapter in managing for performance. So generally we call it business environment and the competitive landscape. So Happy Holidays. In the industry analysis, we got an idea that that what type of the industry it is. We had seen that your company is like integrated, that vertically integrated in this industry. You got your own airline, you got your own the distribution channel, selling points, and you got your own hotels. And then there are the certain services that you hire from the third parties, including the transfer. So this is the general information. Your company is located in the Westland. And in industry analysis, we have taken the example of the real world example as well. There was a company with the name of TUI that's having a kind of a similar structure. In fact, they had even the cruises in their their own cruises in their whole structure. You don't have. When I was looking at that information, I was thinking that your company might be taking that decision, but again, I did not consider it like in detail. Reason being that that would be a strategic decision, but that could be a situation for consolidation purpose only, like consolidation for a cruise company or for any other acquisition would be the similar. Like we have seen that that how we calculate the goodwill and etc. So pre-scene analysis, this is a general statement, like your company is operating in a normal business environment, so you would not be considering the specific situation. That COVID was a specific situation, so that was actually making the normal business practices cease to exist. But here we are considering that your company is operating in a normal business environment, right? So it has been told that that taking some examples from the real world, if those are relevant and or not in contradiction to the information that has been given in your pre-scene, that would be credited. But that if you would be referring some information and you would be challenging the information given in especially the facts given in the pre-scene, that would not be appreciated, right? So this is a very standard type of the table of content of your pre-scene. It gives the the idea that what you're going to see in the next pages of this document. So we would be getting a brief introduction to the company, and then the package holiday industry. The brief introduction to the industry, although we had seen it in detail. Happywell, then the structure of your company, and then that how you do the bookings and the hotels, transfers, and all that, and then that we would be looking at the extracts from Happywell's annual reports and extracts from the Mango's annual report. That's your competitor, which is a kind of a similar company like yours, but one thing that you need to remember that I believe they don't have their hotels, I believe, or they don't have the airplanes. We will see that when we reach there, and then the news reports. I expect that that you listen it carefully, and I was expecting that you have read the pre-scene material, because it is important that you make it an interactive session, and that would be possible only when you have at least read the pre-scene material. Read means that you need to just pick the quick information from your pre-scene. That's why I shared a summary of the summary facts with you guys. So after reading it quickly, you could have a look at the summary, the summary of the pre-scene, or the facts, summary facts of the pre-scene, just to recall the important facts that we have picked from your pre-scene. So Happywell Holidays, in introduction, it's a quoted travel company that sells package holidays. The company operates its own flights and hotels, and sells related third-party products such as insurance and car hire on behalf of the third party. So that there, we have already talked about this thing, that you do have your the own company which is selling the services, which is operating the flight, operating the hotels, but at the same time you are selling the services of the third party as well. We have seen that that in the holiday package, while we were doing the industry analysis, that in the travel accommodation are the some of the part of the total package, but that some of the things might be taken from the third party, or you might be selling those services on behalf of the third party. So when we say that a company is a quoted travel company, we have studied it in advanced financial reporting, that what are the advantages and disadvantages of being a quoted company. When we say that you're a quoted company, it means that you got access to the capital through the capital market, stock exchange. You do have when you are registered there, you could are you are that your stocks are being traded there. You could raise the finances by floating shares, by um, floating the shares of new shares, and that the uh, that you could float the bond to raise the debt financing as well. One thing, if somebody joins, I believe that all of you have uh, the permission that you could allow. So that will keep us like focused. I won't be distracted. If somebody joined, please, you could admit them, right? So then the public awareness: when you are listed company, your information is available. Ease in company evaluation. You know that while we were um, uh, the studying about the cost of the capital, we studied that for a company which is a listed company, it is comparatively easier to determine the cost of the capital, and the cost of the capital actually help us to evaluate the value of the company, or the company valuation, on the basis of the cash flows, etc. So, then there are obviously certain disadvantage. Reporting requirements are stringent. When you are listed company, you are subject to so many regulations, high compliance cost. You will have to have, the legal advisor, the accountants, and all that. You need to publish the accounts, and you need to report the accounts with the regulatory authority. And there is another a disadvantage, that the control is diluted. If a company is owned by a couple of people or a family, and then when they would be making it public by you know listing it with the stock exchange and floating the shares, it will dilute the ownership, and the obviously the shares then would be owned by the other people as well. So holiday package, both the conventional and dynamic package, we have seen, but because that while we were doing the analysis, we could just be looking at the information which is given here. So that will make us to look at the things more inquisitively. So both the conventional and dynamic packages, but that in the later part of the pre-scene, you will see that your company is primarily focusing on the conventional holiday packages. What are the attributes of the package holidays that we're going to see in the next pages, although you have seen it in the industry analysis as well, that what are the attributes of the holiday package, but in a specific case of the Happywell holidays, we will see those, the attributes. And you need to now start thinking about it, that the insurance is covered and all that, that there were certain things as we studied when we studied the pre-scene. So, that there was information given there. So, Happy Holidays administrative base is in Westland. The company sells the phone holidays. Okay, so when we say that you would be having a relationship with the third party, that would require you to have the negotiation skill. You need to have the skills to manage the contracts, and that if you would be executing the contract, maybe that in a case that you are have a contract with the third party, so you are providing them the services, the contract revenue would also be the one case. So we'll see that that if you understand the concept of the contract revenue, we studied there that how you would be recognizing the revenue from the contracts based on the on the basis of the progress that or the progress of the services that has been provided, etc. That the detail would be given in a slide like stepwise. So Happywell's administrative base is in Westland. You need to remember that your country, that the company, the company operating in Westland, the company sells the foreign holidays to the Westlandian customers who fly from their local airports to the destination served by the Happywell. Now, here, that's something which I was looking like you are selling just the services to the Westlandians. So what about selling the services to the people who would be traveling to the from the other destination to your country? So that could also be a situation. So that could also be a scenario. Again, it's a strategic thing. But when they will make a situation for you, they will ask you the question from a management perspective. The management levels perspective. They won't be asking you from a strategic perspective. When you would be starting the operation in those countries to attract the travelers to your country, you might have to establish the infrastructure. You have already the infrastructure, but the focus of the infrastructure would have to be changed. So that might require certain changes in your business model, etc. So and that the asset base give advantage of financing. Okay, so this asset base is actually for the flights and the hotels. So this arrow, like it should be here, like actually when you have the airplanes and the hotels, so it means that you got the fixed asset on your balance sheet, which gives you the advantage of raising the finances. That you could use them as a um, as a collateral to raise the finances, the security. So a high fixed cost, when you are running all the things yourself, you could understand that you would be incurring the fixed cost, which makes the ABC concepts more important in your case. Aircraft on operating or finance lease, that the whatever the agreement is, generally now, the airlines, they have to, or the companies will have to book the liability after the introduction of the new, the IFRS 19, which brings some changes to the treatment of those assets. So airports are important business partners in the value delivery to customer, because whosoever would be traveling to the destination, they would be walking to the airport. That when you do have your own fleet, so you will see that we have been given some information that all the services at the airport um, in Westland are provided by the Happywell itself. But from the other airports, you hire the services from the third party, like the people who assist you in getting the boarding pass, and they get then getting the passengers boarded on the airplane. If you ever got a chance to travel, you must have experienced all of this thing. But then there are so many other services which are provided by the other authorities, like the immigration authority and the security and the airport authority, etc. So there are so many stakeholders actually. In your ecosystem, there are so many participants who collectively operate to deliver this value to the customer. So one of the major touch point where tour operator incur cost, selection of airport affects the customer experience and the cost of the airline. This is very important. You need to remember there are certain airports which are expensive. Then there are the other airports which are not expensive. Like if we talk about the airport, like the Heathrow airport is more expensive than I think there is another one, Gatwick. I'm forgetting the name. That's like comparatively cheaper. Similarly, like in Istanbul, we do have one airport that's Kemal Atatürk. Then there is a airport with a name, some Safia something. That's a secondary airport. Similarly, like in many countries, there is a that in even Dubai, there is a one major terminal where Emirates and all the other airlines are operating. Where then there is a low cost terminal, the terminal 2 they call it, from where that the Fly Dubai etc. that's operating. So the airport makes a lot of difference. Airport um, uh, you know are expensive. The facilities to use for the airline when the airlines land there, the airplane land there, they have to pay for it. When they use the all the facilities there, the airport, they will have to pay it for it. So for the leisure traveler, what I want to tell you is that in reality, the charter airlines generally travel to the secondary airports, not the primary airport, because those are the cheaper. And the leisure travelers are generally price sensitive. But in your case, Happywell is not is that is kind of delivering the quality to the customer. So it's a quality airline, and it's not necessarily the cheapest one. So when we talk about the selling the foreign holidays to Westlandians, so it means that we are traveling to the other destination, so we need to do that. Postal analysis, we have seen that in postal analysis, what we actually do, currency exchange risk, you do have the subsidiaries and that you would be incurring the cost there at the other station. So you would be making some payments to them, and then you might be generating some revenues from those countries as well. So that would be exposing you to the currency exchange risk and compliance to the home country and to the destination country's rules and regulation. That's very important. So you are operating in Westland, you are complying with all the rules. One of the rule is that when you are selling the package holiday, you will get the insurance for the customers, but you know that if it's a dynamic package, it's not like that the customer would be automatically covered under the insurance. So you know that, but for the package holidays, it is mandatory. So this is one of the rules. Then there would be the rules related to the so many things, like it could be related to the carbon emission, pollution, or labor laws. So many, the regulations that the company needs to comply with. So Westland's currency is $. Westlandian company law requires companies to prepare their financial statements in accordance with the international financial reporting standards. So we have seen that the every chapter in your advanced financial reporting was addressing actually the one of the accounting that international financial reporting accounting standards, although it is not covering all those standards, and that is not the scope of management accounting. But the concepts which are important for a management accountant to know, that those have been actually explained there with the implications of those the transaction on the business model of the company. Then you are a finance manager at Happywell's head office. Your primary responsibilities, this is quite a standard like a statement. Your primary responsibilities are associated with the management accounting, and you report to Arina Juhas, the senior financial manager. You need to remember the name of your, it's good like if you remember, but if you just remember that you report to the senior financial manager, that's good enough. But if you would remember that you report to Arina or whatever, I don't know what would be the exact pronunciation, Arina, maybe, who reports directly to the finance director. So responsibilities of a management accountant include the financial reporting, project appraisal, project, those management reports, leading the team, stakeholder management, implementation of strategy. So these are some of the responsibilities that the management accounting would be doing. It's just to give you an idea that what you are a finance manager there now, financial manager. You should remember that you are a financial manager. So it's your prime job. It's your that the job to know your company and then to that perform the task assigned to you in an efficient manner, an informed manner. The feature of a quoted company access to the capital market to reach the finances stringent compliance to regulation, ease in raising finance from banks, expensive to generate financial reports because that needs the audited accounts and all that, having the audited form, legal representatives, etc., etc. Then there are that you need to report the sales tax, etc. So many there are so many the things that you need to comply with. Easy to raise finance, which could be used for R&D or to fund the capital expenditure, help to determine the true value of the company, gives a chance to do acquisition using its share instead of cash. Like if you are going to acquire another company, let's suppose that there are the independent or operator. So you are considering to acquire one of the operators. So management might consider to offer them the shareholding in your company
Uh,
by offering the
Excuse me,
shares.
sir.
Yes, please.
Sir, is travel in the travel industry? What is the what will be the R&D?
R&D, R&D would be like in any industry. In this package, holiday package industry, you might be having a research and development to introduce the technology. That how you would be changing your distribution channels. You might be, working on how you could, make it more convenient for the customers to select the dynamic package. So R&D is not always about the products; it's about the service as well. So you are in a service industry, so the research and development is an integral part of the service industry as well. You would be looking at the patterns or the feedback of the customer, and then you might be changing your, that introducing a new product, new packages, right? And when you own an airline, then R&D become an integral part that you might be doing the R&D that which airplane would be more suitable for your company. That from not only from the economic purpose, operational purpose, from other purpose, right? So
Okay.
sometimes
Okay.
that it looks like the R&D is just for the the manufacturing concerns, and that for the service industry R&D is not. So do we think that the banks they don't do the R&D? They do the R&D, a lot of R&D actually. The financial institution, that's also a service industry in order to improve the services for the customers.
Okay. Okay.
So increases the confidence of investors, suppliers, and the customers as a listing require rigorous due diligence. Now, we have seen that like when you are, we are talking about the airplanes, that whether you do have those operating lease or on the finance lease, there is a one chapter that was discussing it, but that from the perspective of evaluating the company nowadays, that's only the finance lease. So operating lease for the especially for the airplanes, it's no more there. So ownership in an operating lease with the lessor and financial lease transfer option at the end of the lease period um, is there with the lessee. Lessee is the company, like your company is the lessee. Lessor is the, that it's very common in the airline industry that the airlines actually go for the leasing. So this could be like an operating lease, and but that for financial purposes that would be considered as a financial lease. Uh, because there are the certain conditions, we would not be going into the details of those things, like we have studied that chapter where that we discussed this concept in a very detailed manner about the operating lease and the finance lease. So the risk and reward, this is just a recap with the lessor is the company which would be giving you the airplane, lessee is your company. So risk and reward with the lessee. So that when now according to the new IFRS, like the IFRS 19, I believe that's in the 19. Now, when you would be evaluating any operating lease on these parameters, you will find that that's actually the finance lease. So the airline will have to book the liability. So a purchase option doesn't have any option. The lessee have a purchase option. Expense borne by lessor of the transaction here by lessee. No running or administration cost here. Running cost and administration expenses are higher. And then tax benefits to lessee. No depreciation can be claimed. Uh, Interest and depreciation both claimed. Like when you actually when we talk about the operating lease, it means that you are just paying the rentals of the airplane. So when some asset is not in your ownership, you cannot charge its depreciation. But in a finance lease, you could charge both the interest and the depreciation. But when you charge the rental, actually rental is something which include the interest and depreciation and all the other factors into it. So generally, that the rental amount you will find that is more than that, this amount. Okay, there's another a little, the more information, risk and rewards, so just way to explain it. Treatment on the balance sheet. Operating lease off balance sheet financing. So here on balance sheet. So in your case, that the examiner might ask you that your airplanes were on operating lease, and but that the need. So the board of director wants to know that how you would be how it would the new the standard now your company is applying that standard in its like in its financial reports. So how it would be having an impact on your the financial statements. So from as a management accountant, you would explain them by explaining some of the fundamental concepts related to the finance lease and operating lease. So average of fair market value, they have explained like normally lower percentage. Again, this is if you might stick to the amount of information that has been given in the chapter. But if you find it like interesting, you could even explain these facts as well. The nominal rate, the second term payment. Second term means that the first term the airplane is leased for 6 years maybe. Then in the second term you would be doing it for another 6 years. So first 6 year would be expensive, and the next 6 year maybe not expensive. Like I have seen that in the transactions where they lease the airplane for 10 years, and then for the next 2 year is very nominal amount. They lease it on a very nominal rate. Higher rate that includes the residual value. RV is the residual value, right? And depending on accounting board, lease economic life 75% plus, and normally lower percentage, and residual value is generally here like it's less than 10%. Here it would be more. Like if you have a new a brand airplane has been given for a lease of 10 year, after 10 year, do you think that its value would be less than 10% of its the cost? No, it would be more than that. So this is just an the broad guidelines. But again, I'm telling you that you could go back, read the chapter, and you could restrict your explanation to the to the to the lim to the the explanation that has been given in the chapter. Now, the package holiday industry. By the way, I just wanted to give you an idea here. It doesn't mean that we are, explaining that whole concept here again. Again, as I told you already, here in this pre-scene analysis, we are not going to read those old chapter in detail. That's not the scope of this pre-scene analysis. We have already read it, and I would be expecting that if something is disturbing you and you think that that you are not able to recall it, this is the time. Go back, open the book, read it again, and then if you would be having a specific question, you could ask me. Then the package holiday industry. Now again, like in the pre-scene, now we are getting the introduction uh, to the industry. Actually, the package holiday industry. The package holiday, the industry analysis that we did, that was from the real world. Now this is the information given here in your pre-scene. So the the thing that we have already done was just to make us comfortable with this information. So now we do have the background that what this package holiday industry in real life looks like. So we could, relate the things here in order to understand the concept in more detail. So the package holidays usually comprise three core elements that are booked in a single bundle at a total price. Customers booking package holidays do not know the individual cost of each of the three elements of there. Now, this is the the some fundamental concept related to the package holiday. So, if you are going for a holiday to, let's suppose, any destination ABC for 7 days, you will know that that like here in our country, people go for the Umrah. They will tell you that the package is let's suppose that 400,000. So now it includes the hotel, ticket, transfers there, and transportation and all that. You don't know that what hotel actually individually cost you, right? So similarly here, you could, that you could look at it from that angle, because the Umrah is something we all are quite familiar with. So the dynamic packages are going at a faster pace, making the cost of individual elements visible to the customer. So you know that we have been told that the individual cost is not known to the customer in package holidays, but dynamic packages. In dynamic package, customer is picking all the services individually, so they have a fairly good idea about it. So cost of conventional package versus dynamic package, that is something that the companies need to analyze, because the trends for the dynamic package is increasing, and the reason is the reach the customers have got to the individual services. You got the technology and these digital platforms, and the distribution channels have evolved in such a manner that the customers have got a very quick access to the enormous amount of the information. They could make the comparisons. So the flights, one part of the package is the flight. Customer choose the date for their departure and return. They can choose it from a range of destinations served by the local airports that have flight matching those dates. So multiple airlines serving the destination from the origin airport, giving greater visibility of cost of flight to customer. Like, let's suppose that in your package, if the customer doesn't know that what would be the cost of the ticket, but know that so many airlines would be operating from that airport to that destination where the customer is traveling to, so they might get an idea from the price of the air tickets of the other airlines. Which factor customer take into account while selecting the flight timing, cost of like the flight, and the airline reputation for the safety and punctuality. That's very important. Safety is one of the greatest risk in any airline. Like so the this for the package holiday, this flight is one important part of the whole package. So the safety is very important. Safety at the destination hotels is also important, but for the flight operation, the safety is so important. Then the accommodation, the customer choose a hotel or other accommodation, such as a villa at their chosen destination. Arrival and the departure dates match the dates of a chosen flight. So obviously you would be selecting the flight, and accordingly you would be selecting the accommodation dates. So factors affecting hotel selection: location of hotel, the reviews of the people who stayed there, and the category and the cost of the hotel. Category means that it's a 1 star, 2 star, 3 or 4, 5 star, and the obviously the cost associated with that hotel. Location is a very important aspect. So you could relate it, like when you are traveling to any destination, you will try to get the hotel which is close to the most of the attractions, right? That makes your life easy there. The accommodation like that, that you might find a hotel which is cheaper, but that's away from the center of the city. So if you go on a booking.com, you will see that one of the important information they tell about the hotel, any hotel, is that the distance from the city center, from the center of the city. That's important consideration. Every customer, every passenger, when they or every tourist, when they travel to any destination, they take that into account. So the customers are met on arrival at their destination transfers. At destination airport, a coach or a taxi takes them and their luggage to their hotel. They are collected and returned to the airport for their flight home at the end of their holiday. So you know that generally uh, hotels provide these transfers, and sometimes that the package. The company which is providing you a package, they will arrange this the transportation. So practically, customers simply bother to the extent that transfer should not be long. We have been told there in the coming the paragraphs or the preceding paragraphs of this brief, and you will see that some of the customers who are taking the transfer, if their hotel is the last one, so they would have to wait there for a long time. And generally speaking, after a flight, then people don't like to sit in the coach. Like they just want to reach to their destination hotel. It should conveniently take customers and their baggage to the hotel. That's important, and that those coaches should be comfortable. That's a part of the value that's being delivered to the Yes, customer. So just imagine that you have a wonderful flight, everything was great, but you know that while you were being transferred from the airport to your hotel, you had a bad experience. Your coach, that somehow it took a route which was very long. You stuck in a traffic, and you spend more time in transfer than you spend in the flight. So that would not be so much appreciated by the customers. Okay, so package holidays continues like package holidays can be booked online or in person by seeking advice from the staff at a local travel agencies. We have been told that two distribution channel, one is the online, the other one is the physical stores. In the physical stores, there is advantage that somebody would be advising. So distribution channel and distribution channels profitability makes we need to understand the concept. You have studied it about the different distribution channels of the different profitability. So attribute of the personal advice can be placed with the chatbot or that chat GPT. Now it's really it's it has been reached to such a level now that those even the personal assistance could be provided by the technology. So we you must have seen that you will just be visiting a website and some a window would pop up and that and they would ask you that how I can help you, like, so you will just write a question, and for many of the standard questions there are standard responses, although that's not really so good. I personally had the experience with the even GoDaddy, that's such a big company. There were that that the initial answers are given by the chatbot, but when you would be asking some specific questions, then the chatbot will transfer you to a some representative who would actually be reading your message and that the customized thing, personalized experience. And honestly speaking, if you know that the robot is talking to you, you don't feel so good. Somehow, this is we that uh, it might change in the future, but that the kind of generation we belong to, it's still considered as not so comfortable, and people actually want to know that who is actually they are talking to. So it is possible to book a holiday by buying the separate element of the travel and accommodation separately, but the that but the package holidays are usually more convenient. Customers can choose from the package that suit their dates and preferred destination, knowing that the accommodation is available to match the dates of their flight. So we have been told that one of the the attribute which the package holiday is giving is the ease, like the convenience, the uh, the peace of mind. So you would just be buying a package and you know that somebody is going to take care of for all the other things. But if you are individually managing all these things, so there would be a disconnect. Like you got the booking in the hotel and your flight gets late, so you know that you would be losing that booking, or you might have to pay some charges for it. But if it is a package, then obviously the the company would be responsible, because now air transportation is also their responsibility. So this is just the one instance there where which could be quoted as a the positive attribute or the advantage of the holiday package. So um, advantages of the package holidays over buying all elements separately. I've explained you one, like the most important part is the coverage of the risk, and the most important part again is the peace of mind. So that's at the heart of this whole business model Happywell is operating on, that they want to deliver a quality service to the customers. So advantage of the dynamic package, that's like are giving the more freedom and flexibility to the customers when they are booking with the Happywell. Obviously, there are certain hotels which Happywell is offering, and then there are the flights which Happywell is offering. So you know that the customer might not be that getting fit into the standard packages of the Happywell. So they might have to then go for the more customized package, dynamic package, where they might be picking your hotel, but the flights of another airline, or maybe picking your airline and then the hotel of your company. So in the current business model, we have not been given this information, but from the information that has been given in pre-scene, it looks like that you are not doing the dynamic packages, although it has not been explicitly mentioned. So the package holidays can be cheaper than the total cost of making separate booking. Tour operators may own and operate their own aircraft and the hotels, and they may make the block bookings on flight and hotel room from the third-party airlines and hotel chains. The associated cost saving can be used to discount the selling price of their package holidays. So that when we say that the block space are you know booking us the blocks of the seats at the blocks of the hotel space, actually it's a B2B transaction, and you would be getting it at a cheaper rate. Why you will get it at a cheaper rate? Because now the risk has been transferred to you. Airline will be flying the airplane. Now it is your headache. You will sell the ticket. So even if you don't get even a single passenger, airline is safe because you have paid to them, because you have bought the whole space. Similarly, why I am giving you an example, like in Umrah, the people they get the lease of the whole of the building, and then they rent out the room to the people traveling. Because I'm giving you this example that this is something all of you are quite familiar with. Otherwise, that this happens with the hotels as well. So for the hotels and the airlines, so there the two business model, where one model is that where the company own and operate the assets themselves, and then the other one is that where the company actually would be getting the charter flights and booking the space in the hotel. So another advantage of buying package holiday, that's like we have been told that it is cheaper. Why it is cheaper? Because you might be making the profit on the flight, and you might not be making on profit on the hotel. But overall a package, you will see that if it is giving you the the some margin, the company would sell it. But if somebody is selling the services individually, unless they would be making any profit on individual things, they won't be like that would not be making any economic sense. So advantage versus disadvantages of owning the aircraft and hotels, that's quite understandable. It has been mentioned that you would be having a better control over the quality. These are, the pretty standard advantages and disadvantages associated with doing something in-house or outsourcing it. So that in generally it is considered that when you are doing it in-house, you would be getting a better control. You could control the quality. You could have the better operational controls. Disadvantage is that the fixed cost, like you would have to have all those assets at with your company all in the lean season as well. So so that would be posing the risk to the company. The package holidays give opportunity to make the profit from any one element that I've already told you, that you might be making the profit on the hotel or airline, the ticket, but that as a package you are making a profit, but in one of the element like that the company is selling, they might not be actually making the profit. So cost saving can be transferred to price sensitive customers, especially during lean season, to stimulate the demand. That's another aspect, that you own so many assets. So what you would be doing with all of those assets during the lean season? Lean season means that the season when the demand is not high. So lean season. And the peak season is, we have been told that what was the peak season. So distribution channel profitability, we need to understand that what is the distribution. Each distribution channel is how that, that the contributing to the company. From the given information, it looks like that, that you are incurring most cost on your, the on your outlets, because 311 outlets being operated in Westland, you are maintaining the human resources, and if those premises are rental, you are paying the rents, utilities, and all that. Whereas you are selling the online, that is that must be cheaper than the those the physical distribution channels. But that we have seen there in the pre-scene that some of the customers feel more comfortable visiting the office and meeting the the your travel representative physically. There's a one segment they still feel comfortable visiting the outlet, but the information has been given there that the 65% of the revenue is coming from the online channel. So that needs to be um, that evaluated, that how you are doing it, like how that that each distribution channel is giving the margins to the company. So when we talk about the online distribution channels, in online distribution channel, digital marketing is a great tool to influence the customers. And we have been told some of the elements of um, the the digital marketing channels. Um, that's like this search engine optimization, referrals, and then um, social media optimization, and this then the social media payment channels, that that's some of those are paid and some are like free. So this is you need to do it like getting the information about the customers, and on the basis of that that these digital platform help you to analyze the information. If you remember that we got a brief introduction to the the in a one chapter which was talking about the artificial intelligence and the blockchain and the management reports and all that. So, those you would briefly be. You don't need to get into the technical nitty-gritties of how this whole system works, but that from this these headings you could know that the uh, the information of the key customer is coming from the hardwares like the mobile, laptop, consumers uh, they might be giving feedback directly. We have been told that we are getting the information, then you would be processing that data algorithms, and then that the digital distribution, then the company would be making a strategy to accordingly to approach the customer. So we need to understand that which the distribution channel is more profitable for your company. You would be you would be explaining it subjectively. So don't that get confused that you will need to tell the number. You would be giving a descriptive explanation of the whole the idea. Then tourism distribution channel, that's important slide that will give you an idea about the participants in the distribution channels of the tourism products. We got the suppliers, like the suppliers include the transportation companies, the accommodation, hotels, food services, again the restaurants, resorts, recreational entertainment, and then I don't know, somehow it has been missed here, that the the travel services. Transportation obviously include the both the air travel and the surface travel. So that these are the suppliers of the services, and your company is integrated here, like vertically integrated. You are providing the accommodation and the transportation air services directly. Then you are selling the recreational entertainment and the other services of insurance of the other companies, the third parties. So how these services are being sold to the customer? Through the direct channel, that's the internet, telephone, suppliers office, and then the travel agents. We will see that how the travel agents operate to tour wholesalers, those tour operators, specialty channel. There are certain the channelers who are specializing in like in some of the, like we have studied that some of the tour operators are specialized in adventure tourism or etc. So here the customers, the individual customer, the player groups, business group, there are various type of the religious tourism, etc. So package holiday tour operator offer advice and assistance that may not be available from holidays that have been booked independently. That is one of the advantage you need to remember whenever you would be analyzing the situation. Analyzing means that where you would be explaining the the advantages and disadvantages of the both of the situations. And that to analyze the information, whenever the question asks that analyze the situation, so or in a question that they would be asking for analysis, you would be giving the uh, perspective from the both sides. It's not like that you would just be presenting your opinion. You will be doing an impartial analysis, right? Sometimes the student, they just give their opinion and that's it. That's not considered as an analysis. So even if you would be giving your opinion or suggestion, that should be based on the analysis. So do you have explained the both the aspects, and then you are reaching to a conclusion. So most tour operators have that representative based in the holiday resorts that they serve. Reps can provide the customer with the support and advice throughout their these guided tours. The guide would be with you, and he would be I have seen that sometimes the guide would although it's their job, but you will feel that they are your very good friend, because this is how they have been trained to present themselves as your best friend, right? So this can include dealing with any concern or the complaints that might otherwise spoil a holiday, recommending the local attractions, and assisting in the event of problems such as the illness or the lost passport. So one of the most important attribute of the package holiday, personalized assistance, skill needed to become effective rep or interpersonal, like which type of the skills you need to look for in your representative that you would be hiring. They need to have the interpersonal skill, negotiation skill. They might be facing a situation where they might have to deploy these or apply these skills to resolve these situations. So leadership, conflict management, people skills, this is the integral part of your whole study. People skill, managing performance was talking about these skills. So on each of these skill we have studied the whole topic. So you should know that if your rep is facing a conflict, how they will resolve it. You need to train them like in such a manner, right? So the package holidays offer, okay, reps are skilled workers. However, digital disruptions can replace the role of the representatives. Now, this augmented reality, artificial intelligence, and this virtual reality, it has gone to such an extent that it could, that replace this role, or they that the role of the representative might change. So the packet holidays also offer the financial safeguards that are not available on. This is another attribute you need to remember. Personal assistance, that the representative, and then the insurance. So Westlandian law requires the package holiday operator to be registered with the Westlandian travel operator license scheme. Tour operator must make a payment in respect of each package holiday that they sell into a fund that is administered by WTOL. The fund is used to refund the customer if their tour operator goes out of business, they bankrupt, or by if anything happens that they stop doing the business before they travel. The fund is also used by the WTOL to organize flights to repatriate. Repatriate means that bringing the people back to their home country. Customer in COVID, that the repatriation flight, you must have listened this terminology a lot of, so commonly used in the news media. So customers who are stranded overseas if the tour operator goes out of a business during their holiday. So payment to WTL adds to the cost of package but provide the coverage to the customer. They would again be feeling more secure. So this is now that how the this is now by regulation, although, but that it's a benefit for the company that they are transferring the risk to the insurance company, to certain risk. The customer feels safe and covered while taking the package, as it ensures the support in case of any problem. Now, the TARA framework, that's like TARA is for when we talk about the risk, there are certain strategies the organizations could adopt. The one T for transference, E for avoidance, or for reduction, and A for acceptance. So, on the basis of the probability and the amount of the risk, the organization could adopt a strategy. Here, it's an although local requirement, but the organizations could, they are actually transferring part of their risk to the insurance company. So they are adopting the transference strategy. So when the The risk amount of the risk is quantum of the risk is like if the risk event occurs, it's so huge, and but the probability is low. That what is the probability that somebody would lose a passport at the while they would be traveling to any destination? It's a small possibility. So airplane is also insured, like they do the insurance, because the probability of an airplane meeting an accident is low. But if would there would be an accident, the amount at risk is so huge. So they would be getting, the companies would be, airlines would be getting the insurance. So this is the logic. Like when you would be explaining your answer, you will have to tell them why you are not going for, or why you cannot avoid a certain risk. Although no matter that how the professional your engineers are, how the best maintenance practices you are following, but still there's a chance that there's a mechanical, the thing machine, so there could be a chance of accident. So you need to get the insurance for the airplane crew and the passengers. And in reality, that the companies get the uh, insurance for the third party as well. Third party means that if an airplane just fall on Burj Khalifa. So who would be paying for Burj Khalifa actually? Hypothetically, like I'm saying that. So that that's the third party who would be responsible for the loss of the third party. So insurance give the coverage of the third party as well. So this is that the way you would be explaining it, that in case of airplane, this is how you're gonna get the insurance, the process that you would be following. Happywell, okay. So a tour operator versus the travel agent, there are, that the tour operator selling themselves, your company is a tour operator. So you are selling the travel packages from your own distribution channels, and you might be selling your packages through the travel agents as well. It has been explained here that the tour operators are entities that combine the separate elements of holiday into a package that can be sold directly to a customer or can be sold through a travel agent. Tour operators may provide the elements directly through ownership and operation of, for example, hotels, and your company is doing that, you're a tour operator. And they may purchase those elements from the third party, which the independent operators are doing. Travel agents are organizations that sell holidays and the other travel. Travel agents, they don't operate the airline, they don't operate the hotels, they would be selling your products. Like if a package has been given to them, they will sell the package. If they might be selling the individual services as well, they are actually selling the individual services as well. So travel, such as that they travel agents are the organization that sell holidays and other travel products such as airline tickets and the hotel bookings to the customers. Traditional travel agencies were retail shops where the customer could seek advice from agency staff. Such agencies still exist, but many travel agencies offer airline online services that enable customers. So that the one of the you're uh, the player in the distribution channel, they are also like going online. So to select and book holidays through travel agency. So honestly speaking, it looks like that the tour operator would be selling the packages directly. But if your company considered to go for the dynamic packages, then that the travel agent would make a lot of difference because they do have the reach to the customer. You do have the limited, like the number of shops, 311. Do you think that these shops are covering the all of the Westland? No, you need to approach the customer. So you need to have the partner in your distribution channel. So you would be selling the online as well. So how much are the chances that somebody would be visiting everybody would be visiting your website? No. There's a chance that there would still be a segment who would be visiting the website of the travel agents. So that's why you need these travel agents are more important when you would be going for the dynamic packages actually. So Happywell is a tour operator, so sells directly as well as sells through travel agents. That's my assumption. Like we will go and see in detail. Your pre-seen, the material or information given there is silent on it. Advantages of disadvantages of selling directly and through travel agents and online. That's again that I have explained you some of the things which are important to consider while you would be selecting or would be emphasizing on any distribution channel. Travel agents must be charging a commission but have the greater reach and experience. As a travel agent, sell the package of all the tour operator, which could cause conflict of interest. So that you went to a travel agent and he's selling the tour package, the holiday package, the mangoes here, and your companies, right? So what do you think that he would be? He just would like to send a package. It's not his preference that that because if he is getting the commission from both the parties, so it doesn't make any difference to him that what the customer buy. Travel agent selling online versus tour operator selling directly, that's again a point. So you will have to explain it like in detail that as a argument that that your website would not be accessible to every customer. So having the online channels of the travel agents as a platform to sell your products would giving you an advantage. Travel agents are important business partners in dynamic packaging, right? That's what I have explained you. Tour operator versus okay. Travel agent, some tour operators sell exclusively to customers either online or through a combination of online and physical. You are doing it like both, like you are selling online and through the physical shops. Other operator permit the travel agent to sell their holiday package in return for a commission, right? So that has been told here. So I don't know what you are currently doing. Apparently, it's looking that you are perhaps you are selling, perhaps you are not selling to the travel agent, but from the given information, we could assume that you are not selling through the travel agent. So that could be a one option, although that would not be a very something which would require a detailed, the analysis. But there are certain considerations. You need to know that you will have to pay a commission. You need to know that there would be a conflict of interest. You need to know that the advantage that it would be giving you a better access. So 3-4 points, like under those points, you could then explain the advantages and disadvantages, and writing few lines would actually will serve the purpose. So other tour operator permit travel agent to sell their holiday packages in return for commission. Okay. So the different customer segments have the different requirements. The segment of customers still prefer personalized experience and opt to go to the tour operator or tour agent. Digitization is the future, which requires specific type of skills and human resources. So online selling is something which it requires, that the different type of the skills, because there is a marketing, digital marketing. There is a marketing, general marketing, traditional marketing, and there is a marketing, digital marketing. There is a human resource activities of recruitment, that recruitment, selection, and all those activities and the development. And then there is the digital, the tools which the organization use to recruit the people, to select the people. That there is a, that there is a digitization in every segment of the business. So it does, the digitization doesn't mean that you won't require those marketing skills. You would need the marketing skill, but different marketing skills. So many tour operators and the travel agencies prefer customers to look online because to book online because it is cheaper to process online booking than many tour operator and travel agencies prefer customers to book online because it is cheaper to process online. Now, this is challenging the fundamental of your business model, that you do have the 311 stores like outlets. So it's cheaper to process, which makes your business more expensive, whereas you are claiming to deliver the value for money. So in order to become a you know a service provider which deliver the value for money, you need to uh, you need to reduce the cost of doing the business. So many tour operators and the travel agencies prefer customers to book online because it is cheaper to process online bookings than to operate shop. Online sales are generally based on interactive websites that enable customers to input variables such as their preferred local airport for departure, their preferred type of resort, and their price range. Offline sales rely on interaction with a trained travel advisor to guide the customer through the same issues, with the advisor offering the recommendation based on the customer's preference. This requires the provision of retail premises and staff salaries. This requires the provision of retail. So, the cost structure of that distribution channel. Whereas in online, that a distribution channel, your cost would be lower, which is directly challenging the current business model of your company, and that is quite evident from the trends of the customer purchases for the packages, like 35%, 30%, 35% are buying it from the outlets, and the others are 65 or buying it online. So online selling helps to collect data of customer, which this is the advantage of the online selling. We studied about the data collection and the data required for decision making, and then there was another chapter as well where we studied about the management reports and all that, using the customer information. So customer data protection, that's important. That's one risk. Booking through travel agent risk the data of the tour operator customers. The customer's information is now being captured by a third party. They could use that information, and then that they would be having that information. Obviously you would also get that information from the customers, because ultimately your products are being sold. Like if even the travel agent is selling a ticket, ultimately the information is landing in your system, because the information for the flight, yeah, for the the customer information would be plugged in your website. But the travel agent is also having that information. Retail outlets are important to ensure brand recognition and to meet the requirement of the specific customer segment, right? So although there is a cost associated with it, but now that the physical existence would be helping you to have some advantages, like brand recognition. The people would remember the brand. Um, that they would know your company. But that nowadays, although it's becoming uh, the things are changing, brand recognition is becoming a different thing nowadays. The tour operator versus travel agent, we have been told that the online selling is on increase. Package holidays, online and offline, you could see that there is a increasing trend in the online selling and decreasing trend in the offline selling. The share of the online sales is increasing and offline decreasing. Happywell might have to reconsider its business model. No, this is part of your business model. You remember that business model: defining value, creating value, delivering value, capturing residual value. I would ask you guys to remember those four steps. So define how you are defining the value. Your company is defining the value. We will reach there and we will read it. I might give you a question. I might not might. I will give you a question. How your company is creating the value. I just want to discuss it here briefly, because you would be able to answer. Your company is defining the value as the comfort, quality, safety, and convenience being delivered to the customer, giving them a variety of the options, because you are flying to the 28 countries, and some like 81 destination or something, 80 plus destinations, right? um, you are making your flight safe. You are ensuring that this is how you are defining, how you are creating the value. You are creating the value by having your own distribution channels, online and offline. You are creating the value by having your own airplanes, because you want to ensure that the quality is uh, is delivered to the customer. So you have inducted the airplanes. You have your own hotels. Now, how you are delivering the value? You are using the distribution channels. You are using your representatives, and that you are approaching the customer, getting their feedback to deliver the value to the customer. Then the residual value, how you that has been explained, like you are delivering the value to the customer, value for money, like offering them a quality service at, although not a very the cheapest option, but that value for money. Similarly, your residual value, you are capturing the value for your shareholder, stakeholder. You are for the shareholder, you are making profit for them. For your employees, you are giving them a good career. You are a good paymaster, etc., etc. So this is your business model. So if there would be any change in your business model, you need to remember that in all those 4 stages, how it would be affecting, right? If you would just be going for like having your to acquire a transportation, the companies in all those 28 countries, that would be very costly proposition, by the way, that, but that would be getting you more integrated into the whole system in the value chain, and that you would be able to control that aspect as well. Similarly, that there would be another some options as well. So Happywell might have to reconsider its business model of maintaining the large number of outlets. Shutting down some of the outlets might test the downsizing and redundancy concept. You did assignment on it, that how it you would be doing it. It might also test the concepts of recognizing the provision upon creating. You have created a restructuring plan where you are changing your business model. So you know that they would not ask you detail about the restructuring plan. They might attest you on the provisions, that how that what type of the provisions you could create from a restructuring plan. So it has been explained here, managing redundancies. I assume that you remember because you did an assignment on it. I think you guys have done it, an assignment. You somebody would be telling me, have you guys done an assignment on it?
Yes, sir. Yes, sir. I think there was
Yes.
an assignment like H, someone that has joined something like that, deaf company that has
Mhm.
made redundant some employees, 200 employees like that. So we have done that.
Okay, great. So you know that you might have followed more or less the same steps. Notify the redundancy payment service before first consultation, consult with the trade unions, provide information to representative or staff about the planned redundancies, respond to any request for further information, give any affected staff termination notice and show leaving date, issue the redundancy notice, try to accommodate them in other, the departments, and that there's some other things that you could incorporate here, like and restructuring the provisions. Again, I would not go into the detail. The constructive obligation to restructure arises only when an entity has a detailed formal plan for restructuring, uh, identifying at least the business. We have studied it. I remember it exactly. We have studied it. Business are a part of the business concern. A principal location affected, location functions. If you don't remember, go back. You could read it. There was that the detail on it. We studied that when you could in a chapter like which was related to the provisions and the contingent liabilities. So the extended that will be undertaken, and then so when you can recognize that has a detailed formal plan for restructuring and has raised a valid expectation in those affected that it will carry out the restructuring by starting to implement that plan or announcing its main feature to those affected by it. We again, I have given you just the refresher. We studied that. So you know that if your going company is going for restructuring, and then the examiner might give you some information and then might ask you about the provision, so you would be explaining it by applying this concept there. Package holiday destinations. The most popular type of the package holiday sold in Westland is the so-called sun, sea, and sand package. Westland has a temperate climate that is cold for much of the year and has mild summer. Many customers for the package holidays wish to travel to destinations that offer hot weather and sunny skies. Most some customers for 3 years holidays are booking for an opportunity to relax on the beach during the day and to enjoy the restaurants and other activities. That's again information like that. What type of the package are quite common in Westland. So global warming and abruptly changing weather might affect the selection of the destination. So you are currently operating to 28 destination, and you might have to introduce the new destination and might have to pull out from some of the destination because of the weather changes. So you know that there would be a process to do it, like the feasibilities and all that. Value drivers, sunny weather, comfort, easy availability of food, that has been explained here. So 3S is something that you might use in your while you would be writing the answers if it requires you to explain the package. And then the 3S holidays vary significantly depending on the destination and the choice of the accommodation. For example, customers booking family holidays generally choose the holidays resorts and accommodation that are that are child friendly. They seek places where the children can swim safely and that offer activities and the attractions to amuse them. Uh, Proximity to them to theme park is also now again this is the value proposition for the different segments of the customer is different. For the family visiting to a resort, the value proposition is different. Whereas for a like a sole traveler or the youngsters, the value proposition would be different. That has been explained then in the later part of this the pre-scene. So market segmentation, we need to know that that the market segmentation, the different segments would have the different requirement. Each type of the segment must be having the different cost structure. When you are that preparing a package for them, that would be different. Apparently, it looks like the families would not be price sensitive, maybe that price sensitive. Um, Value drivers are different for the different customer segments. ABT technique, when that the fundamental of the ABC is that there is a major portion of your cost is the overheads and fixed cost, and you got a product line or the different services are being offered to the customers. So you need to know that how much of the overheads are being consumed by the each of the product line, right? So here you could apply that concept. You do have the different packages, but you know that your overheads are the same, like the distribution channels, your hotels, and in a hotel you could maybe differentiate, but so many overheads would be the same. So location of the resort is one of the important value drivers. So which type of the customer segment Happywell targeting currently? A premium customer, like who are not price sensitive. Generally they're quality conscious, but that it's a kind of they have given us a statement. It's a hybrid kind of a business model where you are not the most expensive service provided, yet you are a quality oriented, the company. So it's a kind of a hybrid kind of an approach. So ABC, just to give an explanation that there would be the resources which are being consumed by the activities, and the activities are being uh, activities are being consumed by the various the then the for the different outcomes. So you need to associate each of the activity in order to know that how much of the resources are being consumed by the each of the activities in Happywell aviation transportation. This is the broadly speaking, although in aviation and transportation and selling and distribution you could even go into the more details that how much, like for instance in distribution, selling and distribution, uh, the customers who are buying through the online channels, the cost which is being incurred to the online to maintain the online channels, that is relevant for them. And that it might be a situation where your total distribution channels 80% cost is being incurred by those 311 offices, whereas they are generating just a 35% revenue, whereas the 20% cost is being incurred by the online channels and generating 65% of the revenue. So you could you know you could relate it with the distribution channel as well. So these are very broad activities and could be further broken down depending on the situation. And then package holiday destination, adult traveling without children often book the child-free holidays in quieter locations where they can relax. Some hotels set a minimum age of, for example, 18 years. So again, a customer segment. Prevailing weather, customers have the different preferences for the heat and the sunshine. Some customer prefer to avoid the extreme heat. Others are keen to enjoy the sunshine during the Westlands winter's month. Cost, local economies can affect the cost of accommodation and transfer. Uh, Local economies can affect the cost of accommodation and transfer. So that if you would be traveling to Switzerland, there that everything is expensive, so you would have to pay more. Whereas if you would be traveling to Thailand, where the things are comparatively cheaper, we know that some of the destinations are cheaper than the other because of the economic factors there. So because if there is if the labor is expensive somewhere, so obviously you will get the services expensive. Some location charge more for higher quality holiday experience. Difference can affect the cost of flight. Customers generally have the budget for the cost of their holiday. Attraction resorts vary in terms of the things that are available to do and see. Some customers may be keen to enjoy sports and adventure activities, while the others may be keen to visit historical sites. Travel time, some customers dislike the long flights, while others may be willing to travel further to reach their preferred destination. That's generally also a very common factor. You don't want to travel to a, depending on the holidays that you do have. Sometimes people just want to visit the destination closer to their home country. So culture, some customers prefer resorts that offer food entertainment that are similar to those at home. That we when we travel to any destination, we always look for the food which is halal food, and now we would be preferring the place where you could easily find the halal food, while other prefer to experience the local tradition. Whereas that if you are going to a destination, I believe that you might test the and check that you might enjoy the local food because you are your home country's food, you are every day you are eating it. So if you are traveling to some other place, why not to try something new? Depends on the customer preference. Value driver in the packages is the weather, cost, attractions like those, um, the tourist attractions, travel time, and the culture. You need to remember these things. Again, I'm re-emphasizing. So destination located at longer distance and having the different culture might not be preferable by certain customer segment and introducing. So while you would be doing the analysis, you need to use this information actually there. Introducing a new destination requires the balanced analysis. Generally, balanced analysis is a kind of analysis which would be taking into account the all factors. So, if you could remember that I had always told you that your answer should be relevant. Your answer should use the information given in the pre-scene. Your answer should use the information given in the question. So this is the information. These are the things that you would be that you would be referring to and you would be explaining there in your answer while you would be responding to the questions given in the exam. So risk introducing a new destination require a pastel analysis. Risk of various factors could be calculated by the sensitivity and scenario planning. That when we talk about the risk, we would go and we could do the scenario analysis. Yesterday, during the class yesterday or day before yesterday, we discussed it. Like most of you were left because one of your friend actually asked me a question about sensitivity and scenario planning. Actually, he asked a question about those payoff tables, so we got a chance to talk about that how you could perform this activity in a more detailed manner. So here you would be picking some of the the factors, and you would then be doing the analysis. So global warming and abruptly changing weather might affect the selection of destination. Value driver, again we have explained it. So which type of this customer segment? Happywell differentiating itself, like by providing a quality service. Okay, so uh, package holidays, again, destination continues. The 3 years holidays are the offer referred to as the mass market by tour operator. Like that this because the bulk of the market is actually preferring the 3 years holidays, so mass market. But there are the other type of the the traveler, but the majority of the traveler, they prefer 3 years holidays. The tour operator and travel agent, because they are favored by the majority of the customer. Most large tour operator and the travel agent offer a wide range of 3 years destination in order to meet the needs of as many customers. So that providing a variety of the services or the range of the packages is again a value driver. Your company is operating to 28 countries, so that you are providing a good range of the choice to the customer. So demand is seasonal. So forecasting. Okay, so the second paragraph would be actually. So some holiday destinations are open for business throughout the year. The others have designated holiday seasons that coincide with the periods where there is a sufficient demand for hotels, restaurants, and the other attractions to operate. It is generally possible to take a package holiday at any time of year, although it may be necessary to travel. further for sunny weather during westlands winter than during its summer. So there's a hidden information now, that it tells us that if during the winter your packages would be for the destination which are farther from your home country, long flights. Whereas in summer, like you would be, that there are chances that the weather of during the summer, the weather of the countries like which are situated in your region would be the similar. But like if uh, here it is now the summer is starting in South America, it would be the winter. I remember that that in the North America it's winter, and in if you travel in January or February to South America, you will see that this is summer there, and when you get back to South America, North America, like in New York, you will see that the snow falling. So the weather is quite different because this is 10 hours flight from there. Uh, so similarly, like here in our region, that the weather is different from in the different part of the world. So demand is seasonal. So forecasting demand is a critical activity as volatility in demand is a risk factor. So concept related to sensitivity analysis, scenario planning, expected value, and maximax, maximin, and minimax regret are relevant. Maximax the I is missing here. We talked about these things. So I believe that we recorded that session, so that's available from yesterday's. That you could go back and see that it was a quite interesting discussion we did on this, because I was thinking that that your commodities are also perishable. Your hotel room is perishable. Your aircraft seat is perishable. So that the day gone is gone. You can't resell it. The next day it's a new commodity. That, so you every day you have the 210 seats to sell. So if you sell those tickets, great. If you don't sell it, the next day, new 210 seats. Similarly, the hotel rooms. So it's a perishable commodity. So ENSOF metrics, although not a part of your management study level, but you could have a look at it, that you might be looking at like introducing the new product, penetrating in the current market, and developing new product or developing the new market, or you might be going for the diversification. That's unrelated diversification. Related diversification is that you are already doing it. Unrelated diversification is that you would be going into a segment which you are currently not operating, which is high risk option. So that's not the chance. Like, so that your discussion from a management perspective would be limited to the market development, product development, or market penetrations. So market position differentiation, focus differentiation, you could do that. Like you are already differentiating yourself, like you are known as a quality service, but focus differentiation would be like when you would be going to serve the market tailored, the packages and the other specialized packages. That would be focus differentiation maybe. So sensitivity analysis, scenario analysis has been briefly explained here. Again, I'm not going to get into it. You need to read it. We have done it, right? Max, Minimax, and Maximin has been explained. So structuring a holiday package for a different destination, aircraft seat and hotel space is a highly perishable commodity. Happywell could apply these techniques to manage the risk. Like uh, your board might ask you to explain the concept, like we do have on a specific destination. Let's suppose that we during the summer season, how much seats and hotel rooms we should make available for the selling, depending on the historic trends of the demand, which is quite similar to the salads examples that we did. So it's not like that you would be concluding something, you would be explaining it. You will tell that that by adopting this approach, we will have to go for this option by adopting. Or there might be a discussion that the board members, one might be going for a maximax, the other one maximin, and the someone is defending this concept, and you might have to explain it to the certain approaches to the board, right? So again, you could go back and see that table. or you could listen that, the discussion we had yesterday. It was a quite a plain discussion. We did it like in a very plain language, so you could go back and see that. Then the package holiday destination specialized or the niche holidays. Some tour companies and travel agents offer alternatives to 3S holidays. We have been told that the 3S holiday is a mass market, but beside that, we do have the specialist and the tailored holidays as well. So, what is the specialist holiday? Niche holidays offer an alternative to 3S holidays. They consist of packages that are usually aimed to niche market that may be smaller than those of 3S holidays, but are still large enough to be profitable. That the niche is small but profitable. That you would, that size is good enough to make it economically viable for you. The customers might, for example, wish to ski and would be seeking a package that was based at a ski resort and could manage the transportation of skis and other. This is the one example, like adventure tourism could be one. The other, the some tour operators specialize in specific niche and offer the flights and accommodation along with arranging the activities themselves. For example, a golfing holiday could include arrangement to transport customers. Now, if you would be going for a niche the holiday package, you will have to be more integrated in the system, that you might own all these the things, or you might have to go for the agreements, like for the you might be selling on the behalf of the third party. So golf club is owned by the golf club, so you will be selling their service, right? So similarly, ski is like the ski resort. You won't own it, maybe you will own it as well, but you could, you know you would be selling their service in your package. So there you would be selling the hotel, air ticket, and then these activities as a third party, because you're already selling those services, like um the insurance and the other the attractions, etc. You are selling it, so you could do it for in the niche holiday package as well. So for golfing, transport customer golf club also make to make the reservations for them to play at the local golf course near their hotels. So niche holidays are often offered by small but specialist tour operators. So you are not doing it. So there are the operators which are already doing it. So Happywell might have to explore this opportunity. This may require change in business model, and Happywell will have to rent hotel space and transport customers to casual flight instead of the charter flight. So, this is just like out of the box kind of a thing, although your current model based that, providing the two basic services in-house. But if you would be going for the niche market, maybe you will be chartering, you would be doing your charter flights. But for the hotels, you might feel that having a hotel, the round the year at a ski resort would not be a economically viable option. So you might go for a hybrid kind of a model. So how it would be affecting, it would be reducing your it would be causing a reduction in the in your control over the quality, and the customer might not be happy if a customer is already your customer who is having who is buying the packages from you since a long time. So you introduce a new product, they go there in a hotel which you have from you got a space there, that's not your hotel, so the service is bad. So that would be giving a bad taste to the customer. So Happywell can grow to these segments of customers. So that ends of matrix, again, advantages and disadvantages to change the current business model. Again, you would be defining it like in all under those four headings that I have told you. So the tailored, some tour operators provide the tailored holidays that allow customers to specify exactly what they wish in terms of destination and activities. For example, a customer might wish to travel to remote location in Lagiri, right? So that they would like to go on a limousine, right? So tailored holidays are generally much more expensive than the mass market holidays. Um, Mass market holidays. Okay. Generally much more expensive than mass market holidays. These holidays are usually offered by smaller tour operators. So that there are the operators which are doing it. In your pre-scene, we will see that the customer for tailored package holidays are not necessarily trying to save money, value for money. They don't look for it. Obviously, they prime concern is their preference. They are more likely to be paying for the convenience of having a not different type of a segment, that completely different. They are not price sensitive. Holiday package designed to suit their specific needs. So segment small with a high returns. Would it be feasible to serve such destinations with the charter flights? Does Happywell has its own owned hotels at such destination? That if you got there, the very good. But apparently, it looks like your hotels are there at the 3S, the destinations. So there, that you will have to then analyze it in a balanced like way, that if you will own it, what are the advantages and disadvantages? If you will be going and renting the space from getting the block space from the hotels, what are the advantages and disadvantages, and how it would be having an effect on your current business model. So does Happywell has okay. So Happywell currently operating in a mass market of 3S, increasing trends of tailored and specialized package could be a risk to its current business model. So this segment could be served through joint arrangement. That you could do it like yourself, or you could enter into the joint arrangement. Alliances. It is very common in the airline. Apart from this, like studies, the scope, like the airlines, they don't serve all the destinations. So what they do is that they do have the agreements with each other. So that what we call that the Qantas might be operating from Sydney to Dubai, and from Dubai onward, Emirates is operating the flight, right. So that this is how it works. Like it gives a greater reach, a greater choices to the customer when you do have the collaboration. So we learned about the joint arrangement. So you would be explaining that how you could use these joint arrangement to serve the customers. Like for the ends of matrix, I have mentioned it, that how you could do it. Like it has been explained there here, that what is this a product development in case of the uh, in case of Happywell, this product development looks like a more suitable option. Penetration is there, like you are already doing it, so you could do it like this, like market penetration, and the product development is it looks like a great opportunity. And there could be an option then, which is a medium risk again, that you would be entering into the more markets having the 3S. The more entering into more 3S markets. So same product, a different market. So that would be some, the 28 countries, 3S mass market, you might be adding more countries. So that would be the same product, like the same package, right? But here you would be introducing a new product in the current market, or that you then there could be the new product in a new market. That is the diversification. Related diversification is that you are operating to a new destination, niche destination. So new market, new product. You are into 3S products, you are into the 3S destination, you are going for now the niche market, new product, a niche, the new destination, ski resort. So that would be a related diversification. So you will have to tell them that how then the joint, the arrangements, this it should be joint arrangement here. It's a mistake. Because in joint arrangement, you do have the joint operation and you do have the joint venture. In joint venture, you would be establishing a new entity. In a joint operation, you would be just sharing the resources and you would be operating together. You need to see that in joint operation could be like you could have a collaboration with the tour operator, that your flights would be operated to a niche market. So they will arrange the hotel, they would be having a hotel, and their hotel would be used for accommodation, and your flights would be used for that, for the transportation of the customer. For the customer, it would be like a one package. But then there are the two companies doing it. One is your company, and the other one some joint partner. Whereas in a joint venture, you might be establishing a new company. by sharing the resources, by that by a niche market operator and your company, you might go for a new destination, right? And you might be establishing a new company. So you might have to then explain the impact of having the joint operation and the joint venture. Again, this was done like in detail. Again, this is an opportunity for you guys to go back and see it. So transportation. So I think that's enough for today. Okay.